This is Dissecting the Market. I'm James, and as promised, I'm back with an update that Apex Clearing and Northern Star have officially agreed to merge. So yesterday we obviously got the news that Northern Star and Apex have agreed to merge officially. Obviously I did a video on this a couple of days ago to let you know that I would be buying into this yesterday. I'd hoped that the action around CCIV would take the heat away from these other stocks. This had gone a little bit unnoticed, so I was hoping it would give me a good chance to buy in. I actually sold off a third of my CCIV position yesterday to buy into this, and I've now built up a fairly decent sized position. Looking around online, there seems to be minimal coverage on this stock, which is exactly when I'm looking to get into a stock. It seems to be hardly any followers on StockWits, very few videos on YouTube. So really that's kind of a buying signal for me that nobody really knows about the stock yet. To me, it looks like a decent company in a growing sector. So I was quite happy to pick up my shares yesterday. I like to buy stuff before it's cool. And then as everybody else picks up on it and hopefully the price rises, I then reduce my position. And if I want to keep a position for a long term, I'll at least remove my initial investment and leave the rest to ride if that's how I want to play a stock. Now, I'm not a financial advisor, so please remember that and take that into account. What I say could be a load of rubbish. You need to check this stuff yourself. I'm just doing this channel for entertainment purposes only and to just share my due diligence and how I'm investing my own money. So with the merger official, we now have access to the investors presentation. Obviously, this just goes over all the details of the deal so we can actually work out if we're getting a good deal when we're buying this stock and what's going to be on offer in the future. If you missed my video yesterday and don't know who Apex Clearing are, I'll give you a very quick run over of what they do. Apex Clearing are basically the middleman between the broker or the trading app and the market. So they're the guys that actually execute the trades. They're the guys that hold on to the actual stock. They're called custodians, so they actually hold your stock, and they deal with all the transactions and all that kind of stuff. So they're the middleman between the trading app like Webull and the actual market. They also have a crypto arm, which is very similar. They basically hold the crypto and also make a fee every time they're sort of bought and sold via their service. On top of this, they offer a full suite of services as well. So basically, say you're a company that wants to set up a trading app, these guys will give you everything you need. Their servers do all the hard work. The accounts, the customers' accounts and stuff like that are all set up at Apex end. And they'll basically build you a front end for your app. So very basically, that's what they do. But they also are involved in a lot of other business sectors as well, which I'm sure we'll get into during this presentation. So first off, we can see that NSTB will be injecting 400 million in cash, with 450 million coming from PIPE investors. The deal will value Apex at 4.7 billion, and that 400 million from NSTB will buy us 7% of Apex. The new ticker symbol will be APX. Scrolling down, we can see their growth has been very consistent year over year. On the left, it shows the number of clients, which has grown from 169 in 2019 to 201 in 2020. And this shows how many individual customer accounts, as in trade accounts, they have opened. We can see a big jump from 2019 to 2020 with an increase of 3.7 million accounts opened. But what's more interesting is they have already opened another 3.2 million accounts already in 2021. So we can see the spike in demand as more and more investors join the stock market. They manage 92 billion worth of assets, such as stocks and cryptos, and have already completed 67 million trades in 2021 with 450 million trades in 2020. This just runs over some of the benefits of using their technology. Remember, this is B2B business, so it sells its product to other businesses. However, they have a back end to manage all the individual customer accounts and transactions. This is just running over some of the benefits such as fractional shares and instant account openings. Here we can see how they make revenue. So they collect a fee for opening an account instantly. They get a fee for trading, clearing, settling, and being the custodian of stocks. They generate interest on client cash and margin loans, as well as fees for other core businesses and interest on client securities. So like I say, every time you buy and sell a stock or you borrow a margin, these guys are getting a cut. Scrolling down, we can see some of their broker clients such as eToro, Webull and Ali Invest. But they also deal with other sectors like wealth tech. You can see they deal with Sophie, so Chamath is involved in this, StockWits, Stash, Titan. I'll post a link to this presentation so you can take a look through yourself. Here they're just pointing out how quickly the market is expanding and showing some of the addressable markets they can cater for. And here we can see some information on their crypto arm. They've had more than 1 million new accounts open in 2021, with 330 million traded so far this year. But I definitely think this is a sector I can see growing for them. Here they are just comparing themselves to some of the other financial fintech companies, with Apex valued at 4.7 billion. This is just showing their expected growth. Now, I listened into the investor call. They said that these numbers were very conservative. Apparently only 30 million of operating revenue in 2023 will be from new clients. All other growth will be from existing clients. So hopefully if they can increase their new clients, they may even improve on these numbers, but we'll have to keep a close eye on this as we move forward. And finally, here we can see their revenue and expenses. Now, they currently have an EBITDA of 86 million, which has increased substantially from 2019 when it was only 25 million. So although it's good to be in a SPAC that already makes profit, they are valuing themselves at 54 times their current EBITDA. And if we scroll back up a few pages, we can see if we look at 2023, this would still value them at 26 times EBITDA. Now, there's many ways to value a company with lots of variables, and with a company in the fintech sector, you'd usually have high valuations, something like 25 times EBITDA plus. So these guys need to hit every financial goal they've set out for the next 2 years to match their value. So overall, not a bad presentation. The company's very unique in a sector that's fast growing and very hot right now. So a great company to look at. However, the valuation is quite high. So that's something you need to take into account, and because of that, I don't think this is going to rocket up to $50 a share anytime soon, like some people have sort of predicted. However, I do still think that we will see some increase in the price as more people find out about the stock. If you found this video helpful, please remember to subscribe to the channel, give the video a thumbs up, and I shall see you on the next one.